Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome back to the show. Just a reminder, if you have a question, head over to realestateandmortgageshow.com and submit it there.
The segment's just zooming by.
Crazy. Every week.
Every week, like 19 years. I mean, sometimes we're in the last segment and Paul and I look at each other and say, what? That's it?
Well, I remember when we were approached to do this show, Frank and I remember we had a discussion. We're like, this is only going to last about a year. How often can you talk about real estate and mortgages?
A whole hour every week?
A whole hour every week. And I'm like, here we are, year 19.
Yeah. Crazy.
Wow. All right, Frank, you sent me over, we were talking in the week, and you sent me over a list of sort of the top most popular questions you get asked.
Yeah.
So let's go over a few of those and see where we're at. I'm
Open
sure
for 'em, yeah.
I'm sure if they're the most popular ones, I'm sure a lot of people listening have the exact same question in their mind.
100%. And a lot of people call like they're too scared to email, or they don't email, or they don't call the show. And I end up getting emails on Saturday or calls on Monday saying, hey, I listened to the show. Can I ask you a question? So
yeah, absolutely. Yeah. So the first question that you have, and I don't think these are in any specific order, but so banks are encouraging early renewals. Should clients do it?
Boy, it's $1 million question. And I mean, what we saw last week is Bank of Canada, this past Wednesday remain on the sidelines. So, of course, the banks might utilize that to tell clients, maybe it's time that they're going to go up, because the bond markets did swing up late last week. So all of a sudden, we're seeing that banks, may increase fixed rates here and there, because we're going to go through little pockets, just like we're going through right now. Unemployment rate came all the way down to 6.5 a week and a half ago. And all of a sudden now, there's the bond markets went up as a result. And people are wondering, are rates going to go up? And the banks, I can guarantee you, the banks are going to use this to their advantage now. Because if you've got a mortgage...
No, the banks wouldn't do that.
They would never do that, right? You got a mortgage that's at 1.69 that matures in April. You can guarantee that your bank's going to call you within the next 2, 3, 4 weeks, as fixed rates may just temporarily be going up slightly. And we're talking 10, 15 basis points, so we're not talking significant. But if that happens, then all of a sudden the bank's going to call you and say, you've seen the rates are going up. Maybe it's a good idea to early renew now, because we might see rates going up, before your renewal, and therefore you might get stuck with the higher rate at your renewal. Well, there's an answer for that. The answer is to say to your bank, here's your two options. You can either lock me in today's rates now, but they're not going to take effect until my renewal in April, at which the bank's going to say, no, we don't do that. Like, we only do it for 30 days. We don't do it for 120 days. Then you need to do the smart thing for yourself, which is approach a mortgage broker, approach another bank, but I would say the mortgage broker is probably your best option, and get yourself a 120-day rate guarantee. What's involved in getting that? Simple. Application, a couple of pieces of documentation. You don't have to give all the documentation, but we can start off with, if you're a salaried person, with just a pay stub, a copy of your most recent mortgage statement. And that's enough for us to be able to lock in a rate, at least. At the very least, you'll have a rate locked in today, just in case rates go up in the first quarter, even though I don't think they're going to go up in the first quarter of 2026. But if you're nervous about that, and if your bank has made you nervous, then all of a sudden it makes sense just to get that application and get it somewhere else. If your bank's not going to do it, that's okay. They don't care about you, clearly, if they're not going to do that for you. They really
and if they drop, Frank, you're going to drop me, right?
Well, of course.
Yeah.
Of course. The whole purpose is that
that's the worst you can do. Is
worst
what
case scenario is locking in a rate. So at least you get to sleep at nighttime knowing that I know my mortgage is maturing from 169. Now I'm going to be at 389. I know that that's my worst case scenario. Fingers crossed, as we get closer to your maturity, those rates have come back down.
What's the bank telling people right now if they're calling people up going, you should lock in now?
Well, because they're saying that there's a potential of rates going up, and we're going to waive your penalty. You imagine, and again, some Canadians,
how kind of them.
Some Canadians just don't understand, because they have so much faith in their bank that the bank is doing what's best for them. And they forget to look at the profits that the banks make. And the banks do very well off of very loyal people, because the loyalty, unfortunately, goes the wrong direction. The loyalty should be from the bank, who is extremely profitable and making good money off of you, to you. But the banks have turned that around, and they make you feel like you need to be loyal to them for them to keep your mortgage, when in reality, mortgage renewals in Canada do not go through a stress test. Mortgage renewals, if you just leave your mortgage the way it is, you will automatically get a renewal notice from a financial institution as long as you made your payments on time.
Right.
The only time that you'll see that there's an issue where a bank may call a mortgage is because you've missed payments, because you've done something wrong at some point with them. Apart from that, you're going to get that renewal. Banks will come to you with a higher rate on your renewal. That's the other thing, too. Even non-bank lenders that we deal with, if your mortgage is 120 days away, they'll start off at 444 when really they're offering their clients 399 and you client 399. There's that much of a gap. Banks do the same thing. They offer this much higher rate because they're hoping that you're going to be loyal to them and you're going to trust that they're doing what's best for you.
You'll just sign the paperwork and,
of course,
and
costs nothing.
It well, it costs 0.5%.
Well, for you, but it costs the bank nothing. They make more money, and not only that, I mean, they don't even – AI is going to be a part of this renewal process moving forward for the banks. Trust me when I tell you, if they can find a way to save money where they don't have to pay employees to do something, they're going to use it. And I certainly see the banks doing their research right now and piloting some projects where renewals will be done over artificial intelligence. You're going to be calling thinking you're talking to somebody, and it's really going to be an artificial intelligence computer that's talking to you about what your options are.
Crazy, man. That 0.5%.
0.5%. And again, this is for somebody that's coming off of 169, 179, 189, and you're being offered 444. Again, I also want to emphasize that I still get this question 3, 4, 5 times a week. I'm scared of what my payment's going to be. Just because the interest rate goes from 169 to 4% doesn't mean your payment goes up 2.5 times.
It's not doubling.
Yeah, your payment is likely to go up, depending on the size of your mortgage, $200, $300, $400. And for some people, that might not do anything. They're fine. They budgeted in there. For other people, that's a problem because they're already, like I said, living on the edge, and they're just barely making ends meet. And when you're just barely making ends meet, every dollar counts, and all of a sudden you may have to relook at it. So maybe don't take your renewal with your bank because they may not allow you to increase the amortization back to 25 or 30 years. So there's a scenario
keep that
there
payment closer to
where maybe it's considered a refi at that point.
Right.
So if you refinance at that point,
which
well,
we talked about a few weeks ago, which it's a much stickier process going through the refi than it is.
You're right, but I'll tell you that a lot of banks register what's called a collateral mortgage. And when they first came out, we didn't like them because they were restrictive and transferring from one lender to another. Now, a lot of lenders will do a collateral transfer. The benefit of a collateral transfer is when the bank registers the mortgage, they don't have an expiry date on it, where a standard mortgage has a 25 or 30-year expiry
Whatever
date.
your amortization period.
Yes.
Yeah.
So what's really good is we have non-bank lenders that will switch that mortgage over, allow you to increase your amortization without it costing you anything. So that's the benefit that your bank won't give you, but the non-bank through a mortgage broker, the non-bank lenders will. And these non-bank lenders, by the way, most of them are funded by the big banks, so nothing to worry about on that front either.
The money's secure.
The money's secure, for sure.
Absolutely.
For sure.
So in that, and I know we touched on this in the first segment, but what if you're coming up and you're looking at your 4,000 square foot house and your mortgage is renewing and your payment's going to go up and you're looking to sell in the new year? What are you looking at, Paul? Like, I know, like, big house. Maybe the big thing is your backyard is you've done some stunning stuff to it. Like,
well, I always say that our spring market, our spring market starts January 15th. However, if your big selling feature is your backyard, you might have pools and interlock and, ponds or whatever you have in that backyard. If that is your selling feature, my advice might be, let's wait until we can see that yard. Let's wait until we can see that pool. Let's open that pool, unless you have pictures of that already. Like if you got summer pictures.
If you called me in the summer, and
if you came in the summer and you got pictures of that backyard, and it looks absolutely great. Sure, you can sell it in the wintertime, but sometimes we do tell people who have amazing backyards and that's their selling feature. Wait until you can open that. Wait until your backyard is looking, like looking perfect, because that is your selling feature.
Yeah.
But a lot of people, i.e. myself, make that mistake. I mean, remember when I was selling my 4,000 square foot home?
Sir.
I still remember putting all the furniture away, and I had multiple areas with furniture, and my pool was closed. And then we decided to sell. I put all the furniture back out, and I'm like, Greg, what do I do? I have an in-ground spa. It doesn't look great. I have a pool that's closed, and Greg's photography opened my pool and opened my spa and make everything look absolutely beautiful. But
Photoshop. But I mean, at least even in that situation, we hadn't had snow at that point.
Yeah.
So, but once the snow falls, like there's not much, like even Photoshop wise,
Well, it's too late
that we can get into.
Yeah, it's too late. I mean, if you're thinking of selling your property, even if you're thinking about it, you need to get the pictures done in the summertime. Yeah. And if you don't, and you have a property that is your selling feature, it might make sense. I mean, let's talk about it, but it might make sense to wait until the late spring till it's open. And that might be the idea.
Have a question? Head over to realestateandmortgageshow.com. We'll be right back. Welcome back to the show, everybody. Just a reminder, if you have a question, head over to realestateandmortgageshow.com. You could submit your question there, and we'll read it on air on the next episode. And Frank and Paul will reply,
by email
as
well.
soon as possible when you send those questions in. I know people appreciate that. We get a fair number of listener questions in through that, and I know you guys are very quick about responding to them right away, just to make sure people get the information.
Great questions too,
we've had some really good ones.
Questions,
and these are
things we haven't talked about on the show, and all of a sudden we get these questions. It gives us more topics to talk about.
Yeah, once we open up this website, it made it easy for people because not everyone wants to call in. Like I'll say to a friend of mine, he'll ask me a question. I'm like, "That's a great question for the radio show. Why don't you call in? We'll talk about it on the air." I'm not calling in. I'm not calling in. So I was like, okay, well then email me the question on this. Obviously, we're going to talk about it now. But then on the show, we will talk about this question that you have. Because if you have it, I guarantee there's others that have it too, right? So.
Yeah, but Paul, is it because your friends maybe have warrants out for them? And
only a few, Frank. Only a few.
Only a few.
As they're listening right now, saying, "Shh, don't say my name."
All right. So I know a question we've had recently is if you're interviewing a realtor thinking about selling your house, what are some of the most important questions you should be asking as a seller to potential realtors?
The one question that people always start with, which I think is probably the worst question to ask, is what's your commission? Like, if you're leading off with what's your commission, I mean, you don't go to a brain surgeon and say, how cheap can you go? You just don't do that. You say, tell me what the process, tell me how successful you are, tell me how many times you've done this, tell me all about this, and then you say, oh, by the way, what is this going to cost me? Right? Yeah. Like, that's your last question. But when you're interviewing realtors, most realtors, I hope, know their stats. They have to know, how many homes have I sold? How close do I get to asking price? Commissions last, but, how often have you done this? The biggest one that people forget is, what is your marketing plan to get exposure for my property? Right. That should be number one, is because I've said it before and people are like, what? My job is not to sell your home. My job is to market your home to bring buyers to the door. Your home has to sell itself. I'll give you tips on how to get it ready. And we'll do all the work to get it ready. But at the same time, we have to bring buyers to your door. So the best question you need to ask, and the one you lead with, is, hey, Paul, what is your marketing plan in order to bring buyers to my door? How are you going to expose my property? How are you going to get eyeballs on my property? That is number one question. Then it's like, okay, Paul, how many times have you done this? How successful are you?
Right.
How close are you going to get to my asking price? How long does it usually take you to sell? What are your days on market? The success ratios is the second question, the second questions you need to ask. And then at the end of it, when you're like, wow, you sound like you're really good. You sound like you know what you're doing. You sound like your marketing plan is amazing. Oh, by the way, how much is it going to cost me? That is your last question, not your first question. And I think the problem is people always lead with, how cheap can you go, Paul? And I'm like, do you want to be successful? Do you want me to do all the marketing, the advertising to get you top dollar? Or do you want me just to cut everything and just stick it on the MLS and hope we get a good price? That's how I could go cheap for you. How's that?
List and pray.
Yeah, list and pray. But the problem is that's a plan for a lot of people, right? Whereas if you ask me, what is my marketing plan? I know it to a T. If you ask me my success ratios, I know it to a T. You have to know all these answers, and you have to have the right answers in order to get someone a successful sale.
Right.
And like we even saw through COVID, people were like, well, we could list with anybody. I mean, anyone could get my house sold. Every house is selling. Yeah, but there's a difference between selling for $10,000 over asking and $100,000 over asking. A big difference.
Huge difference.
So even during COVID, I was saying to people, don't just pick the cheapest realtor. You still need a marketing plan to get you top dollar, because if I just stick it on MLS, sure, it's going to sell, but you're not going to get the exposure, and you might only sell for X. Whereas if I take my marketing plan, I put it on steroids, and I know what I'm doing, you're going to sell for X times, 10.
Well, I remember seeing properties in COVID, and the ones that were properly marketed would get like 15 offers on them. The ones that weren't properly marketed got 3 offers.
Nine, like most of what we do, we have a 160-point plan before we even hit the market. Like what we do with our properties, where we expose them, how we hit different websites, all these different things. We have 160 things we do before that house actually hits the market.
Right.
But those 160 things is what's going to get you top dollar for your property, because we're doing all this before it actually hits the market. So the next time you're interviewing an agent, that's what you're asking for. What is your marketing plan? What is your success ratios? Then what is your commission? Not the other way around. And I think the mistake that most people make is they flip it the other way.
You'll have a more successful sale going that direction than
100%. I mean, you need to list with someone who knows what they're doing and actually has a plan. And a plan isn't stick it on the MLS, take my pictures with my iPhone. That is not a plan. That is not a plan.
Hey, Paula, the number of real estate agents gone down since COVID? Or is it still the same amount? I mean, I know that the education's much tougher. It's really ramped up over the last 5-10 years, which hopefully eliminates some of those. Hey, let's see if I can get into this business. It's easy. I can make quick money, and really I don't have to be that good at it, even though it's someone's biggest purchase, which seems absurd.
The real estate board has changed the education process, which is amazing. It's literally really hard to be a realtor now, which is smart. I mean,
good thing you got in when you did, eh?
Seriously. But you know what? You're handling someone's biggest asset. You're handling sometimes millions of dollars. You better be competent. In 2019, I think we had just over 3,000 agents in the city. Last year, we ended up with just over 4,000.
Wow.
So it's definitely increased. As our market gets tougher, though, we do lose realtors because it becomes tougher. And it's the old adage, 90% do 10% of the business, 10% do 90% of the business, right? And it's the same in this industry. And but I'm just happy that they've made it tougher to get into the industry, because before, i.e. when I got in. but I'm going to tell you something that's funny. I was actually talking to a guy yesterday who lives in Florida. To get a real estate license in Florida, it's a 2-week class.
Yep.
2 weeks. Here, like, it literally took my son over a year. It's if you can get it done in under a year in Ottawa or in Ontario, you're doing well if you get in under a year.
Yeah.
And that's the way it should be. Like, this is not a,
part-time. It's hard to do part-time. Like,
it's
in our industry, it's almost impossible to do part-time because so much changes from week to week. You can't be in it part-time and be successful at it.
And be on top of all the new...
on top of everything that happens.
Can you imagine if you said to me, hey, Paul, hot market, we need to go see this property. Sure, Frank, I'm working from 9 to 5. Can we go at 6 o'clock at night?
Yeah.
No, when you want to see a property, you want to see it now. So, like, this is not a part-time business. In fact, in my company, I don't hire part-timers. You have to be full-time. This has to be your job.
You have to be committed to it.
It's not a part-time.
Yeah.
It's not a part-time job.
It should be that way.
And the education requirements are similar on your end as well, right, Frank?
They are. They're still a little bit too simple for us. I mean, those that have been in the business like I have for many, many years, say the entry level is still a little bit too easy. They're working on making it a little bit tougher. They have relicensing every 2 years, which we're all required to have these credits by the time they renew our license at the end of March. But still, I mean, showing up to a conference counts as so many credits.
Wait.
There's a couple of
They do it
courses.
at the end of March, the busiest season?
Well, it's just renewing your license.
Oh, okay,
right?
fair enough.
So it's not that you're doing anything at that point, but you got to go to these courses. You got to take these courses. You have to go to these sessions to be able to get your credits that you need to be able to renew.
It's funny. It's funny. Someone asked me the other day, like, what do I have to do to be a mortgage broker? How hard is it? My response is always, well, Frank's a mortgage broker, so it can't be that hard.
Yeah, okay,
it can't be that hard. I mean,
there was
come on.
a comeback coming at some point. So.
I mean, what, do you get it on a weekend in a Cracker Jack box or what?
All right, Frank, quick question off your list here.
Yeah.
Fixed versus variable rate. How do borrowers choose?
I mean, it's a difficult decision for many because in Canada, most people are accustomed to taking a 5-year fixed, and that seems to be the standard. And usually, it's a good decision. I mean, it gives you peace of mind. You get to sleep at nighttime. But sometimes you're better off to go with the adjustable variable. And history shows that, take away the 23, 22, 23, 24, those 3 years where Bank of Canada was forced to increase prime extremely rapidly because of inflation getting out of control. But generally speaking, Bank of Canada makes 8 announcements a year. You look at historically over the years, you'll see that maybe 2 or 3 of those have any changes. Most of them are they sit on the sidelines and the economy decides whether to go up or down, what's going on in the economy. So, realistically, again, if you look at it over 20, 30 years, you would usually be ahead if you took an adjustable variable rate mortgage versus a fixed. But the differences aren't significant enough. So most Canadians will opt for the...
If you feel better sleeping at night.
Yeah, I know what my payment is for the next 5 years. I'm not going to take a chance. You take that. The downside of taking a fixed is that if rates were to come down tremendously, and if you're with one of the big banks, the penalties are excessive to get out of it, where if you're with a non-bank lender, they're not as bad. So that's one of the advantages of maybe talking to a mortgage broker as opposed to your bank. And that's one of the decisions you have to make when you're renewing your mortgage, whether to go with the bank. If the bank's slightly a little bit lower, but you have maybe you're thinking maybe I may have to sell my house in 2 or 3 years because I'm retiring and I just want to get out of the housing market, then you may want to look at a non-bank lender, pay a little bit more on the interest, but you'll benefit in the end on the penalty.
Right. All right. Birthdays?
Yeah, just Josh Cardillo, good friend of mine who works for the Ottawa Centre, celebrated his birthday yesterday. And at the same time yesterday as well, Mortgage Brokers Ottawa and Advanced Mortgage Investment Corporation, in conjunction with, I won a community award with Sagen, who's one of the default insurers, back in October, and they made a $5,000 donation to any charity that I wanted. And I know that CTV did a great job yesterday. I don't know what the final tally is yet, but of providing and doing the on-air to raise money for the Ottawa Food Bank, which the average family now is having to go there. That's how much volume they have right now. So we were happy to donate a little over $10,000, which we're extremely proud of. So again, it goes with our slogan, please support local charities and businesses. Please do. Continue to do that, especially over the Christmas season. So
awesome. Well, I just have one of my amazing ISAs. Mark Purdy has his birthday on Wednesday, the 17th. So happy birthday, Mark.
Happy birthday, Mark.
Awesome.
Just a reminder, if you have a question, head over to realestateandmortgageshow.com and we'll get to it on the next show. Have a great week, everybody.
Thanks, and please continue to support local businesses and charities, everyone.